financial argument. Follow us on YouTube.
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and with us today is Roy Friedman, president of MTB. MTB is an authorized purchaser for all the major sovereign mints, a member of the MKS PAMP Group, and the exclusive distributor for PAMP products in the United States. Roy, thank you so much for joining us today.
My pleasure. It's a pleasure to be here. Thank you.
All right. Well, I'd first like to discuss about the demand we've been seeing for precious metals recently. Now, we've seen a pullback in the precious metal markets. What have you been experiencing? Has there been an increase in wholesale demand for precious metals over the past week or two?
There has most definitely been pent-up demand and money on the sidelines that's been waiting to enter the market. And this is being seen at all levels of market participation, from the largest hedge funds and mutual funds down to and including private investors who are buying small quantities of gold and silver. So all investors, for the most part, seem to have waited for the dip that's occurred in the last couple of weeks, and silver demand has really spiked with the drop in prices that we've seen, and gold demand has increased as well. But it's silver that has seen proportionately the bigger gain, the greatest increase in demand over the last 2+ weeks.
Now, as an authorized purchaser of the U.S. Mint, what kind of demand have you seen specifically for U.S. Mint products?
Well, there has been a very sharp increase in Silver Eagle purchases over the last several weeks. Most notably, we've seen this demonstrated by the publicly released figures that the U.S. Mint provides, and dating back to the beginning of July, where the market seemed to be in the midst of a rather slow summer season. Silver Eagle sales by the U.S. Mint in July and August dropped to either side of 1.3 million ounces per month. And that picked up a little bit in September, where sales were U.S. Mint sales of Silver Eagles were approximately 1.7 million ounces. In the first 2 weeks of October, maybe even a little less if you go by trading days. But as of today, the U.S. Mint has already sold 1,950,000 Silver Eagles in the calendar month for October. So based on the demand that we have seen in just shy of 2 weeks, that is far exceeded the monthly totals of July, August, and September. So it clearly demonstrates that there was a great interest in purchasing silver, but the silver interest lied at lower levels. The pullback in prices that we've seen this month, has certainly seen fabricated silver products being sold at a greater and faster pace than they have certainly since back in May and June.
Have you seen yet any shortages where you can't get precious metals? And if not, do you anticipate them that in the future?
Well, it's there are currently no delays in fabricated silver products from any of the sovereign mints or any of the major refineries. With that being said, most of the providers of metal, the fabricators of metal, including the U.S. Mint, do not disclose what their stockpiles of products are. So it's speculation as to when products may become scarce, and how close we are to that phenomenon taking place, which we seem to see 2 or 3 times a year, every year for the last couple of years. My personal opinion is If silver continues to be sold, and we'll use Silver Eagles as an example, if Silver Eagles continue to be sold at the current pace, we could be looking at a scenario perhaps sometime as early as November, where the U.S. Mint begins to get low on their stockpile of 2016 Silver Eagles, and the Mint will go back to what's commonly referred to as the allocation process, which means every authorized purchaser gets a certain amount of Silver Eagles every week based on a formula that the U.S. Mint utilizes to make the allocation process. It is also a possibility that many of the sovereign mints, including the Royal Canadian Mint and the Royal British Mint, the Austrian Mint, it is possible if sales continue at current pace that those mints could potentially be a little delayed on releasing 2017 dated silver products, as it takes a little time for them to retool and change from making a fabricated 2016 dated coin to a 2017 dated coin. But I wouldn't think if that scenario holds true, takes place, I would not envision the delays for those particular mints potentially being long-lasting. I would expect that to be a rather short-lived phenomenon.
All right, and now moving our focus to the presidential election, what is your perspective on how a Trump victory or a Clinton victory would impact the bullion market?
Well, I think in both cases, without getting too political, but in both cases, I see the longer-term implications being bullish, regardless of who gets in. And I think perhaps the deviation on the way the precious metals markets react would simply be a short-term phenomenon. In the short term, if Clinton gets in, I suspect you could potentially see a little bit of an easing in precious metals, and if Mr. Trump gets in, I suspect you could potentially see a little bit of a bigger dip in the market. But in either scenario, I don't think the dip is going to be long-lived and perhaps more than 5%, 5 to 7% in value. In both cases, you have to remember, gold is reacting more to the changes in policy set forth by the FOMC. And despite who wins the election in November, any changes more likely to occur if Trump were to win probably would not occur for upwards of several months. And in that time frame, the course that the FOMC appears to be on, which is to raise rates once in what remains in 2016, is likely to occur regardless of who gets in. And at that point, even if there's a change at the top and Chair Yellen is asked to step aside or is removed, the Federal Open Market Committee, will do what they see fit, and regardless of who is at the top, it certainly appears as though we can expect no more than 1 or 2 rate hikes to occur in 2017, and probably no more than 1 or 2 rate hikes, in my opinion, to occur in 2018 as well. So it's really a function of how you view the FOMC policy more than, I think, what happens with either candidate getting in. The other factors that often influence gold, global world events, I'm not sure, that either presidential candidate will have that much of an impact on what takes place with regards to geopolitical events that often drive gold higher.
All right. Well, before we let you go, I just had one last question. So what percentage of the investing public is actually investing in precious metals? And as we go forward, what would happen if, just a small percentage more of the public started investing in precious metals, such as maybe only 2%? What is your perspective on what would happen then?
It's a very good question, and it's something I actually like to discuss. And I'm not shy or embarrassed to tell you that I've been in the precious metals markets since 1980. And for many years, certainly for the first 15 or 20 years of my career, gold and precious metals and many commodities were still being referred to as alternative investments. And over the last, I'd say 15, maybe 20 years, that sentiment has changed dramatically. And gold and silver are, I would say, most commentators, most experts, whoever they may be, no longer consider gold and silver and crude oil and base metals to be alternative investments. These are all asset classes that are now being utilized and make up part of a well-defined, well-rounded strategic investment for investors, both large and small. And when I started in the market, so many years ago, I would say, volume from then to now, overall global volume, has probably increased by a factor of 300 to 400%. And there are several reasons that, gold has gone up and gold has gone down throughout my career. But certainly one of the many reasons that saw gold reach its lofty levels of just a couple of years ago, as compared to where it was trading for much of the 1990s, was the fact that many investors, again both large and small, were looking for alternative investments to stocks and bonds, and they became comfortable with precious metals to the point that precious metals are no longer considered an alternative investment. They're considered a secure part of any well-diversified portfolio, and I suspect that trend will continue as the population grows, as investors, not necessarily here in the United States, but in areas of the world that still do not have great access to the physical precious metals markets, have that access. You'll continue to see much greater demand in the years ahead for physical gold, physical silver, and I suspect that will only help to drive the market to greater heights than we have seen in between 2012 and 2014, and certainly much higher than perhaps anybody thought gold would ever get to. When you look back to where it was trading in the mid 1990s. So the better educated and the better access and the greater access that global investors have to our market, will certainly only help it to drive the market to new higher highs, which I think we will see sooner than later.
All right. Well, Roy Friedman, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
I'm easy to find online. A web search is pretty easy to find some of the commentaries that I write, and anybody who wants to reach me can reach me through our company directory or our company homepage, which is mtbcoins.com. Thank you for asking.
Once again, thank you so much for your time.
All the best. Bye-bye now.